A little bit about investing. Here's one of the world's greatest investors, Warren Buffett. If you had invested $1,000 with him in 1956, it would be worth $27.6 million at the end of 2006. And here's his partner, who's a billionaire and incredible investor. Look what he says about all the scams on investing on the internet, people promising you 300% or whatever. Warren Buffett's track record and what he got as investors was about 20% a year, approximately. So there's a lot of lying going on. If you invest at 20% a year, you will do very well over time.
If you take the modern world, where people are trying to teach you how to come in and trade actively in stocks, well, I regard that as roughly equivalent to trying to induce a bunch of young people to start off on heroin. It is really stupid. And when you're already rich, to make your money by encouraging people to get rich by trading. And then there are people on the TV, another wonderful place. And they say, I have this book that will teach you how to make 300% a year. And all you have to do is pay for shipping, and I will mail it to you. How likely is it that a person who had suddenly found a way to make 300% a year would be trying to sell books on the internet to you? And it's ridiculous. And yet, I've described modern commerce. And the people who do this all day think they're useful citizens. The advertising agents that invent the lingo. But they mislead you on purpose. And I get tired of it. And I don't think it's right that we deliberately mislead people as much as we do.
This website, Guru Focus, tracks the biggest and most famous investors around the world. And as you can see there in the 10-year track record, the person that did the best over 10 years, Ron Barron, I think, is up at about 19%. So these returns promised on the internet of 300, 500% is totally ridiculous. Not even the best people are doing those kinds of returns every year on a consistent basis. Maybe in 1 year or 2 years, but you don't invest for 1 or 2 years. You have to invest at least 10 years to get a good return compounded over time. So this is very important to understand. It's like people promising you they're people running the 100 meters dash in 2 seconds.
How likely is it that a person who had suddenly found a way to make 300% a year would be trying to sell books on the internet to you? And it's ridiculous. And yet, I've described modern commerce. And the people who do this all day think they're useful citizens. The advertising agents that invent the lingo. But they mislead you on purpose. And I get tired of it. And I don't think it's right that we deliberately mislead people as much as we do.
So people are misleading people by promising totally ridiculous returns and lying to them so that they can sell them stuff to make money from them. Here, this I got from Warren Buffett's company, Berkshire Hathaway's annual report. So you can see there, top line right on the right-hand side, the S&P 500 with dividends. That's what he measures his results against. Top line compounded annual gain 1965 to 2017. The S&P did 9.9% compounded annual gain per year. Berkshire Hathaway did 20.9. But over the years, you see 1964 to 2017, that really starts compounding. You can see the actual return was 2,404% against the S&P, still very good, 15,508% your money would have increased by. There are very, very few people that long-term beat Warren Buffett's record. One of them is Peter Lynch. He got 29.2% compounded annual gain. So for the 13 years, you can see at the bottom, 1977 to 1990, he ruled as the head of the Magellan Fund. He turned $20 million into a whopping $17 billion in those years. But as you can see here, it's still not 300 or 400 or 500% a year. It is still in the 20s, 29.2%. So Once you get into the 20% annual return, if that's compounded, it makes a huge difference over the years. And that is the very, very best returns the best investors have got. It's like the 100 meter sprint. Once you get below 10 seconds into the 9 seconds, it's only the very best people that do that.